Market to Market is everywhere you are. Subscribe to Market on YouTube, find us on the PBS video app to stream on demand, and add our 3 podcasts on your favorite podcasting app.
Welcome to the Friday, October 29, 2021 Market Plus. Here's Sean Hackett. And Sean, you look a little more casual than normal, and there's a reason for that. You were on your way here. You'd pushed off from the airport in Miami, and an engine decided it didn't want to fire. You tried to make a connection, so instead we're talking to you from a hotel room. But given the pandemic, we can talk to you wherever, whenever. So thank you for being prepared. I hope they find your luggage.
They say they know where it is. Famous last words, but I think we'll eventually get it. But at least I had a collared shirt.
Well, there's always the gift shop. You know, I love whatever town I'm in now would have been good. You just got back on a trip from Brazil. You talked a little bit about during the show on that. Was that a business trip?
Yes, we did a crop tour of coffee, 8 days of it, we did over 1,400 miles in Brazil. And of course, within there, we saw a lot of grain markets, a lot of sugar, talked to a lot of farmers, talked to a lot of business leaders, and got a really good flavor for what is the business climate down in Brazil. And it was a not only a fascinating trip from that perspective, but it's just a beautiful, beautiful area there in central Brazil, just amazing.
So we talk about South America a lot. Brazil is one of those that, we picked up some slack that Brazil had, but Brazil is prepared to take back any slack they've given to anyone around the world. Do you agree? Sure.
Absolutely agree. As long as they get the rain, Paul, they are ready. We were there. They had 2 to 3 times above normal rainfall in October, and crops are going into ground. They're kind of greenhouse-like conditions, totally opposite from what we saw last year. And we think they're going to continue to get good rains into the end of the year. It's going to be hard to get a bullish story out of Brazil. We think if we're going to get a bullish story, it's going to have to be out of Argentina this year on drier conditions.
What about when it comes to currency?
Well, normally, Paul, I'm sure when the real weakens, it tends to bring more selling out of Brazil and vice versa. But we've really diverged from that. Usually corn and soybeans are very, very sensitive, especially coffee, very, very sensitive. And they're kind of ignoring the currency. And in some of our talks, inflation, and delay were the 2 things we heard over and over again. So what's going on is that the crops that are still in the hands of the farmer, they're storing it tighter than they would have in the past because of inflation. 30% inflation in Brazil is what they were telling us. And when you have delays, of 1-2 months, even longer of loading ships and getting product out, it just takes that ability to throw those supplies on the market from currency off the table until and when we eventually get our hands around this problem. But right now, it just doesn't look like we're really making much progress on that right now.
Okay, so inflation is a story that is, a lot of Americans think it's just isolated to the United States, but it is in a lot of countries and it's a global. Is that an offshoot because of just the global economy in general?
Well, clearly the pandemic has been a trigger for a lot of this inflation. The policies from governments added inflationary issues to that equation. And then you throw on some pretty severe weather volatility that's brought in some shortages. And you really had this perfect storm of these 3 events coming together to create. And what happens with inflation, once it gets going, it's really, really hard to stop it. And now everybody wants more salary. The truckers' strike in Brazil, I saw just a couple of days ago, is kicking in. Everybody wants more money now, and they think they have the upper hand once again for the first time in a while. Now that mentality, it's very hard to put that back in the bottle. Yeah. And so that's where we're at.
Okay. Well, we have a question that came in. We have a lot of great questions again this week. They came from all of our different channels. This one is from Tom on Facebook, and he's asking, with rising input costs, is $5 corn the new $1.50 corn?
Right now, at where we are today, as we said in the prior program, low to mid 5s, December 22 corn is a great value in our opinion. We are aggressively telling our livestock producers to do whatever they can to lock in that price. We do not believe that price is going to work under most scenarios that we look at, Paul. So in the context, I believe that $5, low fives is a rock solid level for corn right now.
Okay, so we talked about the letter N and nitrogen, and the question about fertilizer. This is one of the ones we'll use. Bradley in Nebraska asked us, have fertilizer prices hit a top?
They might have hit a top overseas, because remember, that's LNG over there, and they're at 30, 35. You know, think of our natural gas being at 35, Paul. I think we would have a lot of concern in this country. You know, we have a lot of concern at 5 and 5.5. So we have a long way to go. But I think probably overseas, probably have topped out. There's a lot of demand destruction going on. But in the U.S., I don't think there's a lot of whole demand destruction going on in the $5 area. I think if we're going to get prices high enough to do the job, it's going to have to go considerably higher if we're correct about this very long, cold, protracted winter. So in that context, the U.S. price, we think, has further to go, and that's going to put more pressure on to the upside on nitrogen fertilizer prices.
Now, where you were supposed to come visit, we would have welcomed you with upper 40s today. We're going to be lower 40s next week, pretty much the rest of the week. So winter may settle in early in November. You talked about that long, cold winter impact on livestock. But Aaron in Ocheyedan, Iowa wants to know, though, at this point, speaking of waves, this is a different kind of wave, in a potential next wave higher in commodities, does Sean foresee 22 corn peaking earlier than average this year, or later, say July or beyond, like 2020? Because remember, we peaked early this year. Do you see that happening in 22?
We do. And it's because we believe that the lion's share of the weather problem this coming growing season, Paul, is going to be a very, very late ending winter in the Northern Hemisphere planting season, and record snowpack melt creating lots of flooding. So think of 2019 kind of planting conditions, very, very challenging conditions. That means price it all in very, very early in the season. And as weather then breaks away and frees up, you then work your way down. So we do think this is a earlier high than late at this point.
Well, we're an inch short in Des Moines for a record for October rain. Our friend Glenn in Ohio tweeted earlier today. I think he said something about 14 inches of rain in his area. He says it just looks awful. You know these two areas are not alone. So even if you could put nitrogen on right now, you probably couldn't if you could get a hold of it because it's just too wet. So what does that impact have on that price of nitrogen?
Well, I mean, if you're not going to be putting it down because you don't see the benefit in putting it down, it will hold back demand for a little while. But at the end of the day, the farmer will put it down. He will get that opportunity if the price is right. And right now, the price is not right, especially if you're putting crops like corn and rice down.
All right, let's talk about the quickness, the way things go. Merrill in Johnston, Iowa was tweeting at me today, and he said, when prices move this high this quick from last fall to May, June, we usually have to experience low prices to follow. How low do you think corn and soybean prices will go? I guess first you have to buy the premise of the question. Do you think we're going lower?
Well, I believe that what happens is we go through what's called a phase transition, Paul. You have an initial phase transition, which we already had. Then you go through a volatile consolidation. If you look at the corn price, Paul, it's gone nowhere but traded volatilely in a flat pattern. That's consolidation. Now, soybeans have had more of a downward move for sure, and the wheat market's actually near its highs. But we're consolidating. I don't believe we're at the kind of peak where you would expect to see kind of these mini crashes that we're accustomed to seeing when prices get too high. I think that might be what we see, Paul, in spring, summer of 22. If we get this chaotic planting season, that could be the high that leads into a much more protracted decline. I don't believe that's now.
Okay. Well, let's talk about basis a little bit. Lonnie on Instagram, he's born to corn there. If you follow him, it's always a fun follow. He says, our local elevator pushed the basis bid for us, so we locked it in at a number of H2A or H2 arrives for winter delivery. I don't think I've ever seen the basis that good at the local co-op. Are they trying to secure bushels now, or will basis continue to improve?
At the end of the day, Paul, all this is a result of having a lot less corn and a lot more demand. And once again, we're in an environment. Am I going to get my deliveries on time. If Sean is right and we have this chaotic winter and blizzards, how much of a delay am I going to have? I mean, the security of supply is taking precedent over the price of supply. So when someone's pumping up the basis, they're saying to you, we want the security of having it over price. I don't think that's going away, Paul. Not right now.
Well, you were telling me between the two programs that we recorded, that instead of it being 3 months out, you're hearing of people buying 6 months out. Expand upon that a little.
Well, I'll relate it to the coffee, like in the coffee situation. They're typically, trying to buy 3 months ahead, but there's been such delays in receiving shipments or shipments taking much, much longer that they're saying, you know what, I'm going to buy 6 months out because I don't know if I'm going to get that 6 months, but if I buy 6 months out, some of it will fall in when I need it. I just have to be safer than sorry and not get caught with orders I've already committed on my end of the aisle. And once again, I don't see anything in a chaotic winter season making those logistics any easier. The Bomb Genesis storms they had out west actually suffered greatly. The shipping of product out that way significantly slowed everything down. And now they say there's another one coming behind it. So these are things that are just continuing to cause problems and gumming up the system.
All right, so I saved the Debbie Downer question for last. And this is from Roger in Hancock, Iowa. He's asking, will interest rates be the killer of the party in the next year to slow down excess money printing going after reduced goods?
No. And the reason I say no is because the government is committed to spending trillions upon trillions upon trillions of money in their fiscal spending approvals and policies. The only way that's going to happen is interest rates must stay low. The only way they can spend that money is the Federal Reserve has to print that money. And the only way that can happen is they print the money and they buy the bonds and they keep the interest rates. They call it yield curve control. They've thrown a trial balloon out there for the last year about this is the next policy initiative, buy unlimited amounts of bonds to prevent the interest rate from going up so that we can keep the government spending and keep the engines oiled. Of course, if you lose the bond market as a free market, the only market that can react to fiscal misfortune is the dollar. And so the dollar would have to react violently downward to do the job that the bond market is not allowed to do. And of course, that is another factor we think that plays into 2022.
And that could really frighten people in a short amount of time. All right.
Yeah.
I think we were mostly positive, right?
I'm very positive. I love agriculture. Nothing I'd rather do than be talking agriculture, talking weather with you, Paul. I am very optimistic about the U.S. farmer, and I'm sticking to it.
All right, Shawn Hackett, thank you so much. Next time we'll see you in studio with the smooth sailing. How about that?
And luggage in hand.
And luggage in hand. All right. Thank you, Shawn. Thank you for your insight.
Thank you, Paul.
That'll do it for Market Plus. Next week, we explore the ongoing debate over water quality, and Ted Seifert will join us to analyze the markets. Thanks for watching. Have a great week.